Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks resume gains after a volatile session as officials outline support for businesses today, while a weekend stimulus briefing was short on specifics. The US is sending an advanced missile defense system and the troops to operate it to Israel to deter Iran. Meanwhile, the humanitarian toll deepens with a drone attack on Israel and fighting in Lebanon and Gaza. UK Prime Minister Keir Starmer will vow to rip up red tape and pitch his vision for Britain to executives later today at the International Investment Summit here in London. We will have coverage of that, and we're going to be speaking exclusively with the Prime Minister later today. Happy Monday. European futures currently in lackluster territory after ending last week in positive territory. Fresh records coming through on Wall Street by the end of the play on Friday. The earnings story out of the banks, particularly JPMorgan, lifting sentiment. Another big week in terms of the earnings story with the likes of Goldman and Citi fleshing out their details, and in Europe, ASML as well. Later in the week, you have economic data in terms of retail sales out of the US. We also, of course, have that decision from the ECB on Thursday, expected by these markets to come through with a third cut of the cycle. Let's check in on the markets then in terms of how the futures are positioning. European futures currently a little softer, down 0.1%, as I mentioned. S&P E-minis off also by about 0.1%. NASDAQ futures down by 0.2. Cross asset doesn't seem like we've got the elements at the moment. Maybe we've got some technical issues, but I'll tell you anyway what's happening in terms of euro dollar. We lead up, of course, to that ECB decision later this week. Euro dollar at 109, 0.1% lower on the single currency. The pound at 130, also a little softer so far in the session. The Bloomberg dollar index is up 0.1%, so that's part of the story. We, of course, are building up to this International Investment Summit here in the UK and that conversation with Keir Starmer, the Prime Minister. Will he give more details in terms of the plan for the longer-term vision, and will it attract the investment that this economy so desperately needs? Worth mentioning as well that in the commodities space, and I will touch on this because it's important, Brent is down 1.2% at 78.10. Part of that is down to the China story, talking of which iron ore is currently up 2.3%. So watch the miners and watch oil at the session later today. Let's cross over right now to Singapore. Avril Hong standing by for a deep dive on the Asian session. Once again, the focus is on China. The details coming through over the weekend and today, Avril.
Absolutely. Those details from the Chinese finance minister, that briefing, there was a lot riding on this, but ultimately we didn't get that headline dollar figure in terms of additional fiscal stimulus, but something that some optimists are riding on potentially, and that's perhaps being reflected in the stock markets today, is how there were these pledges of support for the property sector, for local governments, and to some, these are the pain points of the Chinese economy. So a bit of a positive signal coming out from Chinese authorities today. Initially, we saw equities not quite knowing what to do with themselves, but eventually in the morning session headed into gains. CSI 300 clock gains of about 1.5%, managing to build a bit on that as the afternoon session kicks off. We're also seeing how the Hang Seng today managed to pair those declines of 2.6%, about 0.4% lower into the lunch break. So that's what we're seeing in terms of what investors are gleaning from the events over the weekend, Tom.
Avril Hong, thank you very much indeed. With a check on the Asian markets, currently the MSCI Asia Pacific, as Avril mentioned, in positive territory, up 0.1%, slightly more activity on the CSI 300, of course, in China, up 2% so far in the session. China's highly anticipated finance ministry then briefing over the weekend. That was on Saturday, lacking some of the firepower that equity investors, at least some of them, had hoped for. Beijing has promised more support for the struggling property sector and local governments, but economists aren't yet convinced it is enough to defeat deflation. We had more details and data on the inflation front out of China. For more on this, let's bring in our China correspondent, Min Min Lo. Min Min, what were the key takeaways then from Saturday's briefing? They're going to have a drum roll of expectation leading up to this Ministry of Finance briefing. It seems like, at least on some fronts, they underdelivered.
Yeah, we're seeing quite a range of market reactions and commentaries coming out right now. I mean, some investors are disappointed by the lack of that magic number, that 2 trillion yuan in additional stimulus that investors were hoping for. Now, I would say that is possibly still on the table, given that any fiscal budget revision, as well as additional bonds that are issued above this year's quota, that has to be approved by the legislature. So we might still hear that after the NPC Standing Committee meets in late October. But the other measures the Ministry of Finance laid out include a one-time injection of, or rather raising the local government debt quota in the form of a debt swap, a hidden debt swap. And that is key because local government has been lagging in spending. This would take the pressure off local governments from repaying those debt and actually focus on expanding resources to revive the economy. And I think markets were disappointed that there wasn't any specific stimulus targeted at consumption aside from that doubling of the quota for scholarships for college graduates, but nothing to the tune of the massive scale of cash transfers that investors were hoping for. But I think one important commentary that came out from David Lidao-Kui, that is the former PBOC advisor, he's saying that that local government debt swap, that is key because local governments have been so cash strapped. They had delayed payments for contractors, for direct and indirect employees to the tune of about 10% of GDP. That's a huge number. And if local governments can focus on paying out all the money they owe to people, that's essentially a cash transfer. It's essentially a consumption stimulus in his view.
OK, that's really interesting. And the emphasis on the if from you there, important, of course, in terms of whether or not local governments can actually act on this. And we had a reminder over the weekend, or at least over the last 12 hours or so, of the challenges facing China when it comes to, at least for parts of the economy, the deflation story that continues. What for you jumped out in terms of the inflation data that we've seen out of China?
Yeah, I guess it's not surprising that Producers' Price Index is in negative territory again. Now it's the 24th straight month. But I think CPI, that also disappointed markets. The consensus was for a 0.6% rise, but what we saw was only 0.4%. And that's after we saw food and vegetable prices increasing because of the typhoons, the bad weather. So if you strip out those volatile food and energy prices, the core inflation, that's just hovering above zero. That's the weakest print that we have seen since February of 2021. And it indicates this worsening of the deflationary spiral that is reflected not just in these prices, but also new higher wages. In third quarter, that's down by 0.6%, according to that online recruitment platform, Zhaopin. And quarter on quarter this year, it's been on the downtrend. So that deflationary spiral, that's more evidence that this fiscal side stimulus is increasingly important for the government to pull off.
OK, Bloomberg China correspondent Min Lo, thank you for the latest and the context as well in terms of the data out of China. Now, US stocks hit fresh highs on Friday. Fresh records once again on Friday, with the S&P 500 closing at a record for the 45th time, the 45th time so far this year. For more, let's bring in Bloomberg's Valerie Taitel, of course, has a finger on the pulse of the markets and what is driving them. Valerie, talk us through the records that we saw stateside. How much of this was down to the banking story? And talk to us about the repricing around the rates markets.
Yeah, big part of it had to do with the banking earnings that came out on Friday. Yeah. It is the fifth straight week of gains now for the S&P. It's the longest run of winning streak since May. And as you said, the 45th high for the S&P this year. But plenty of that was powered by the Wall Street story. We had those banking earnings out from JPMorgan and Wells Fargo. Both of those shares up over 4%, and that moved the KBW Bank Index to its highest it's been in over 2 years. We still have plenty more bank earnings to come on Tuesday, but there is still some angst going on in the bond market, Tom. If we take a look at the Treasury market volatility, it is still at an elevated level, showing us that repricing that happened over these Fed cut doubts is still really taking its time to shake out in the market. So while the equity market is really on a good tear, there is still some underlying angst going on in the Treasury market as we reprice the Fed's path.
Yeah, indeed. So there's almost a 20% chance that they do nothing in November, the Fed. So 82% chance that they will cut, but only by about 20 basis points currently priced in. So there's still a little bit of doubt creeping into the November decision for the Fed. Talk to us about the ECB. To what extent is there a lack of doubt around what the ECB does? To what extent do we assume they go with a third cut
Yeah,
this week.
It's been very interesting. It's funny that the in-between meetings, it's only been 5 weeks, which is shorter than average for the ECB, but it's been quite a headspin when it comes to the expectations of what they're going to do this meeting. Most on the street expect them to cut 25 basis points. And it's been all down to this, the ECB officials, they appear to be abandoning this recent caution that they've given on lingering inflation pressures and instead responding more to these forward-looking survey data points pointing to a contraction. Up on screen here is also a picture of just how the European economy has fared since COVID compared to the U.S. The European economy is lagging. It is growing below trend, and it appears that the ECB officials are going to do more to address that problem. We also had a survey out this morning from Bloomberg. Analysts across the street are now predicting a third quarter contraction for Germany, putting German output, that's the real growth engine of Europe, flat for the whole of 2024, Tom.
Yeah, the need for the catch-up is clearly there on that below-trend growth for Europe. And once again, the focus, the heavy lifting may fall to the ECB. Valerie Teitel, thank you very much indeed. Here's what everyone's been thinking about across this week then. The focus today, at least here in the UK, is this investment summit. Of course, Keir Starmer, the Prime Minister, will be giving a speech a little after 10 a.m. UK time, around 10:05 is what we're hearing. And then we will be sitting down, Bloomberg will be sitting down for an exclusive conversation with the British Prime Minister, so certainly tune in for that later in the day as well. Tuesday, this is something that Valerie touched on. We have the additional earnings coming through in terms of the US banks. You've got the like of Bank of America. You also have Citi and Goldman all reporting on Tuesday after the solid numbers that came through from JPMorgan. And on Thursday, it is the meeting from the ECB with that expectation of a cut. But of course, it's what we hear from Christine Lagarde as well in terms of the outlook that will be important in terms of how to think about the ECB's next steps beyond this meeting this week. Later today, then, as I mentioned, yes, the UK Prime Minister, Keir Starmer, will be speaking exclusively with our Head of Economics and Government, Stephanie Flanders, at the UK International Investment Summit. Here's the timing for you then, 2:30 p.m. London time for that exclusive conversation with the UK PM. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. And, of course, a lot of that focus is on the detail that we've had out of China in terms of additional support that's come through in the last 24 hours or so. Coming up, the US is sending an advanced missile defense system and troops along with that defense system, troops that operate and man that defense system, to Israel in an effort to deter Iran. We bring you the latest on the Middle East next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the US is sending an advanced missile defense system, including the troops that operate it, to Israel. In response, Iran's foreign minister says Tehran has no red lines in defending itself from threats and that the US is putting lives of its troops at risk. For more, our Horizons Middle East and Africa anchor Jemana Pasechi joins me. There's been a lot of news flow once again out of this region over the weekend. Let's start, Jemana, with this missile defense system, the THAAD defense system that the US is sending to Israel. Is this unprecedented? What does it tell us about US support? What does it tell us about potential vulnerability in Israel as they weigh up this retaliation against Iran?
That's right, Tom. So the news came out yesterday. Pentagon said that they are supplying Israel with this high technology advanced missile defense system known as THAAD. The acronym stands for Terminal High Altitude Area Defense Battery. But alongside that, they're also going to be sending 100 U.S. soldiers to help equip and support with the launching of the system. And this would actually be the first time U.S. Army is deployed to Israel since October 7th. So notable in that regard. President Biden was asked about it, and he said that he ordered the Pentagon to deploy the system to help defend Israel. And of course, this is in the run-up to, as you rightly mentioned, Israel's widely anticipated response to the Iranian ballistic missile attack that happened on October the 1st. There were two such incidents of Iran firing directly onto Israel. Most of the missiles then were intercepted by Israel's already standing air defense system in the form of the Iron Dome, also David Sling. But it's also notable that over the weekend as well, Israel revealed that there was actually damage sustained to private property from the October 1st attack in the range of $40 million to $53 million. Unclear whether it came from the rockets themselves or from debris. But the point is, damage is being sustained. Hence, why the U.S. probably felt the need to help Israel bolster their own air defense system. But also worth flagging, Tom, that over the weekend as well, Hezbollah fired further drones into central Israel, and IDF reporting that 4 soldiers were killed overnight, 7 severely wounded. Just another example of how critical at this time it is from Israel's perspective to support the air defense system, given that these attacks are ongoing. And Hezbollah have actually said that they will continue firing rockets so long as Israel's ground incursion in Lebanon continues.
So the death and the suffering continues as well in the region, in Israel, as you just outlined for us. But, of course, in Lebanon and in Gaza as well over the weekend.
Yeah, so as we spoke about and have been speaking about, the conflict has been expanding in several areas. It's not just, of course, Iran, Israel that we're talking about. Northern Gaza, it is worth mentioning now that a military siege has been going on there for over 10 days. 400,000 people have been told to evacuate. And this as IDF expressed concerns about Hamas regrouping in that part of Gaza. Northern Gaza also subjected to airstrikes that have killed over 20 people, central part of Gaza overnight. And here we're playing some images from overnight attacks that happened at Deir al-Balah, and one of the hospitals and tents crowding displaced people, also reportedly killing over 20 Palestinians who were sheltering there. But IDF say that there were signs that Hamas militants had been regrouping in that particular part of central Gaza. We also talk about further ground incursions in Lebanon, and the IDF are saying that they have been successfully dismantling some of Hezbollah military infrastructure along the south. There's about 120 kilometers of border that separates Lebanon from Israel. Equally, Israel has come under a lot of criticism recently for the injuries sustained to some of the UN peacekeeping troops along the border. They're known as UNIFIL. They've been deployed there since 1978. There are about 10,000 UN peacekeepers at the border. Several of them got injured in the last couple of days, and the Israeli Prime Minister himself has sent a message to the UN peacekeepers telling them to evacuate their positions. And actually, he went one step further, saying that they had been providing a human shield to Hezbollah, because the IDF state that they found tunnels linked to Hezbollah very closely located to some of those UN peacekeeping bases. So this has actually blown out into somewhat of a diplomatic issue, with the Italian Prime Minister Giorgia Meloni giving a call to the Israeli Prime Minister over the weekend. Italy have more than 1,000 peacekeeping troops deployed in Lebanon. And the risk here, of course, is that more injury and more harm could be sustained to those peacekeepers. But now, as far as that base is concerned, they have withdrawn, but there are plenty of others still situated on the border.
OK, Horizons Middle East and Africa anchor Jemana Basechi, thank you. Coming up, Taiwan's science and technology minister speaking exclusively to Bloomberg about how tensions with China and the US election could affect the island's chip production. That conversation is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, China's military is holding drills around Taiwan that it says are a warning to the self-ruled island's government to halt what it calls separatist acts. A spokesman says the exercises involve army, navy, air and rocket forces. Taiwan's defense ministry says that it dispatched forces to respond. Taiwan's President Lai Ching-te said last week that he would stand up to the challenges posed by China. And Washington's support for Taiwan amid China's growing assertiveness is one of the diplomatic flashpoints that the next president in the US will have to confront. We spoke to Taiwan's National Science and Technology Council Minister Wu Chengwen about how the US election may affect the island's chip production.
I don't worry about whether the Republic or the Democratic parties. That I believe they will all agree on continuing the same direction. I don't worry too much about that.
Do you see that putting further pressure then on Taiwanese companies to expand production facilities in the US?
Well, it's an issue. I believe, yes. But in short term, maybe it's painful for the Taiwanese companies because it's more expensive, actually, if they move over there. But in the long run, maybe it's good for them, from my point of view, because they can improve themselves.
I do want to talk about the other areas for cooperation between the US and Taiwan, and drones has been highlighted as a particular area.
Drones, yes.
Where would you look to partner?
We are working on a model that maybe we can establish a local supply chain here in Taiwan, from chips to other components and to the modules to system. And we would like to work with the US based on the innovative systems that have been developed in the US, because in the past we don't have this kind of industry.
China has really established a lead in the drone market for a variety of different uses.
Right, we know that.
How long is it going to take for Taiwan to catch up, and can it catch up, do you think?
That is why we are working on this project now. We don't want to use drones from China anymore in the future. Our intention is to gradually replace all the components from China. And as a matter of fact, most of the components may be made by Taiwanese companies in China today, but in the future we would like to invite them to come home.
Returning to semiconductors for a moment, but speaking about China, people will talk about the technological advancements that China is making in its chip technology. Others would say, actually, you need to think about how far is China behind TSMC, and that really gives you the true indication.
When we talk about the most advanced technology, I think China is behind quite a lot. But if we're talking about mature technologies, they are not behind.
How many years then are we talking about?
When we talk about the most advanced manufacturing technologies, which is 2-nanometer silicon technology, CMOS technology, I openly say that more than 10 years.
You mean it takes a full decade to catch up, or you think that it can be done sooner?
Not any sooner. Impossible.
OK, Taiwan's National Science and Technology Council Minister Wu Chengwen speaking exclusively to Bloomberg. US President Joe Biden has announced that $612 million in recovery aid for areas hit by Hurricanes Milton and Helene. The funding will go towards strengthening the region's power systems. Biden says damage from Hurricane Milton alone could cost $50 billion. Coming up, Elon Musk's SpaceX has achieved a world first after its Starship rocket booster was successfully captured on its return to the launchpad. We bring you more details of that huge development in the world of the space industry, private space, and Elon Musk's role in it. That is coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. Happy Monday, everyone. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks resumed gains after a volatile session as officials outlined support for businesses today, while a weekend stimulus briefing was a little short on specifics. The US is sending an advanced missile defense system and the troops that operate it to Israel to deter Iran. Meanwhile, the humanitarian toll deepens as fighting continues in Lebanon and Gaza. UK Prime Minister Keir Starmer will vow to rip up red tape and pitch his vision for Britain to executives later today at the International Investment Summit here in London. We're going to be speaking exclusively with the British Prime Minister later in the day. Let's briefly check in on your markets. European futures are currently flat. US futures in similar territory. Nasdaq futures pointing down 0.1%. Across assets beyond and above equities, you're looking at euro dollar currently at 109, the pound at 130. And in terms of commodities, a bit of focus on oil, currently off by 1%. But iron ore is up in the session, up 2%. So we watch the miners at the open. Now, Fitch Ratings has put France on a negative outlook. That's after Michel Barnier's government announced 60 billion euros of spending cuts and tax increases in next year's budget. Fitch had already downgraded France from AA to AA minus last April and says it now expects, quote, a steep rise in government debt towards 118.5% of GDP by 2028. And it's been a brutal year for European car makers, with sales slumping in the face of fierce competition from Chinese competitors. So how can they indeed turn things around at the Paris Auto Show? Sounds unlikely. It's a short period of time. But let's bring in Bloomberg's Oliver Crook, who's there. And maybe it's the messaging, maybe it's the forward look in terms of expectations, maybe it's the pipeline of models. What is their mission in Paris, Oliver?
Yeah, listen, Tom, I mean, this is really what it's all about for the car industry, right? We can talk about the passenger deliveries and all these sort of figures in the abstract and the macro, but this is really where you sort of display the models, the actual cars, the technology that are coming to market. And in the Paris Car Show here, it's all about the electric vehicles, despite the fact that there's this sort of perfect storm for a lot of these European auto players, which is the demand for EVs are just not there. Global demand in general is sort of waning, increasing regulation. By the end of this year and into next year, they need to be selling about 20% of all the cars they sell into EVs. Otherwise, they get billions of euros worth of fines. This is a story we haven't talked that much about, but this is front and center for all of the executives who are here trying to bring these new products to market. And really the focus are sort of these smaller cars. And the key, Tom, is that price point for these European players to try to start to compete with the likes of BYD and Xiaopeng, who are now entering the market here over in Europe and trying to get the prices incrementally down. So we have Stellantis offering new cars at under 25,000 euros. Renault has got one at 35,000, next year 25,000, and then the year after that down to 20,000. That is all. That is basically going to be the focus here for these CEOs. And remember, these are the cars that they've been developing for the last couple of years. With that EV demand falling, how is that going to skew their sort of strategy going forward? These are the conversations we're going to have throughout the morning, with, of course, a couple of sort of interesting concept cars as we have there behind us.
I was going to ask, Ollie, what is that monstrosity behind you? This is just, my
it's a delivery. It's a delivery van. It's a concept delivery van.
Okay, it's not your next. It's not your next vehicle to whiz through the streets.
No, and there's a French talent also for naming cars. The Estafette, it's called. Yeah.
Oh, perfect. Well done, France. All right. On Chinese automakers, then, it's a very different environment, isn't it? They're facing the tariffs, 20,000 euro EVs or products coming through, models coming through from Europe. OK, that's lowering the price point. What is the situation for the Chinese automakers on the ground? What is the mood there?
Yeah, listen, Tom. Well, listen, right here you have Renault behind me, and right next to me over here we've got Xiaopeng, which is making a huge push into the European market. And as you can see, they've got a few glitzy things, including the sort of drone there. These are actually those flying drones are going into use in Dubai. They cost about $150,000. 2 people go within them. But staying on the ground here, for these Chinese automakers, despite the fact that they're facing all of these tariffs, this really fundamental premise of the European market being key and important for them, that has not changed, Tom. And for them, even though they're going to have to deal with higher prices, maybe they'll be making a lot less money in this market for the years to come. For them, it's all about building that brand awareness within the European consciousness. And so you see Xiaopeng behind me, they're unveiling a new car that's going to be a first for this European market. But what they're also bringing to market, Tom, is also not just sort of the technology of the physical car itself, but the digital side of the car. This is where the Chinese are very, very strong. So they're flaunting, bringing sort of AI into the car and all these sorts of things. And for them, they've got about 7% market share in Europe right now. They really want to boost that up, but really they're playing the long game here, Tom. And despite the fact that there are these tariffs and all of these sort of conflicts going on with China, particularly economically, for the years to come, eventually the production will be here in Europe, and they need to really build that brand of awareness within the European consciousness.
Okay, they already have 7% market share. Ollie, what else are you going to be watching for? You talked about the price point. You talked about how China is looking at playing this market. What else are you watching for in the days ahead out of the Paris Auto Show?
Yeah, listen, Tom, I think one of the things that we really can't avoid here is I think there's a couple of interesting individual stories with the car makers. Renault, which is a car maker that we don't talk that much about, it's clearly the smallest within all of the automakers within Europe. They're the only car maker that is positive this year in terms of the stock move year to date, given everything that has had, all the difficulty that they've had across the board. What I think would be interesting to watch, Tom, is also where these partnerships sort of evolve. If you think about potential consolidation in this sector, Renault is a very small player. When we speak to the CEO, looking in the future, how do you basically defend against the possibility of potentially a takeover at some point in the future? And of course, the thing that everybody here is going to be talking about is Stellantis. Carlos Tavares last week doing a sort of full management shakeup over at Stellantis. And frankly, investors were not terribly impressed by that. The stock going even further down. We'll be speaking to him a little bit later to see what his strategy is to turn the car maker around.
Okay, that is an interview you definitely want to tune in for then. Oliver Crook on the ground for us at the Paris Auto Show. Fantastic stuff. Thank you, Ollie. And later today, as Ollie mentioned, we will be speaking with the CEOs of Stellantis, but also Renault as well as a host of other leading figures from Europe's auto industry at the Paris Motor Show. To Germany now, where the party of Chancellor Olaf Scholz is considering fresh subsidies, in fact, on electric vehicles as a cornerstone of its economic policy ahead of next year's elections. A strategy document seen by Bloomberg suggests the centre-left Social Democrats are looking to boost EV sales by reintroducing a purchase premium for battery-powered cars. It also calls for special tax incentives for companies with a Made in Germany agenda. Now to the banking space. Shares of JPMorgan closed higher after the lender reported a surprise gain in net interest income for the third quarter and raised its forecast for the key revenue source. JPMorgan kicked off US bank earnings on Friday alongside rival Wells Fargo, with Bank of America, Citigroup, Goldman Sachs and Morgan Stanley all set to report later this week. A number of those coming through on Tuesday. Let's bring in Bloomberg's Charlie Wells, who's been following all of this for us. Let's start with JPMorgan then. Net interest income came in much better than expected. Jamie Dimon sounded a bit dour. What was going on? What stood out to you?
He didn't like all the focus on it. And I think this is a metric that's really important for these banks. And it was very positive for them in that high rate environment. Now that the Fed has taken those rates down, it's going to become a little bit more difficult. But if you think about JPMorgan, they still, in these results, sort of defied that lower rate gravity. So that net interest income up 3%. The expectation had been a slight decline. But I think a really positive indication for them here is their investment banking fees. They were up 31%. And that's the kind of metric that you want to see. That's the kind of development on that metric that you want to see going into this lower rate environment, because that could help pick up for potentially lower money coming in from that net interest income side.
Yeah, so you need that engine to kick into gear as maybe NII starts to soften, even if it hasn't yet softened. Talk to us about, we've got the Business Investment Summit here in the UK. It's been a lot of build up to this. Certainly the new government is pinning a lot of hopes on this. Did we hear anything from these banking sectors, Wells Fargo, JPMorgan, about their investment plans here in Blighty?
All you got to do is walk around Bank Station in, I would say, about an hour, and you will see a U.S. banking commitment to the U.K. with all the swag that the bankers carry in, especially those gym bags with branding on it, Citigroup, JPMorgan, etc. But interestingly, if you look at some of the investments that they've made here in the U.K., I think the JPMorgan retail unit is really striking. So slowly but surely, that has become one of the largest digital banks in the U.K. They've got £20 billion in deposits, which is large larger than a lot of these other challenger banks. They're investing in credit cards, which Bloomberg has written about, and their wealth management unit, Nutmeg, has about 200,000 customers. So there you see this kind of faith in the UK retail space, which kind of counters, I think, some of the narratives that we're hearing, at least in the short term.
Okay, very interesting. What are you going to be looking for in terms of the other bank earnings that are laid out later this week? Tuesday is a big day in terms of the bank earnings picture as well, with the likes of Goldman and Citi.
We're about halfway through bank earnings reporting season for these big UK banks, US banks, excuse me. And for Goldman, it's going to be a really big focus on trading. We had their CEO talking last month about how it could be, worse than expected. So let's see kind of how the rubber meets the road there. And then Bank of America, it's going to be really interesting to see what the consumer does, because they have more exposure to the US consumer. We saw, a strong and resilient consumer show through in some of these JPMorgan earnings. Let's see if that kind of matches at Bank of America.
Okay, Charlie Wells breaking down the bank earnings for us with a preview as well. Charlie, thank you very much indeed. Here's what else to look out for this week then. Today is the Paris Auto Show. Oliver Crook is on the ground for us, bringing us the latest headlines. On Tuesday then, as Charlie mentioned, Goldman Sachs, Bank of America, Citigroup. The earnings come through from some of the real big hitters in the banking space after JPMorgan, of course, came through on Friday. And UK employment data as well drops on Tuesday. Wednesday, it's UK inflation. Will it change the dial? Expectations are that the BOE will go again with another cut in November. The inflation print could be informative in terms of the thinking, at least the positioning around the BOE. Thursday is the ECB rate decision, fully expected by these markets to cut again. And importantly, and again, Charlie was talking about the US consumer, US retail sales drop on Thursday. So that will be an important indicator as well, as there are, of course, significant question marks now over the Fed's next steps. And on Friday, China, GDP data out of the world's second largest economy, retail sales, industrial production, and UK retail sales as well. So a data dump out of China as we continue, of course, to pass the detail around the stimulus efforts. Coming up, the UK Prime Minister is pledging to cut red tape as an international investment summit begins here in London. We're going to break that down for you, as well as looking for that swag that Charlie was mentioning. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg has been told that DP World has reversed a decision to pull out of a UK government investment summit that starts today here in London. And a source says the company is set to announce a $1.3 billion investment in its London Gateway port that will create 400 jobs. We are told DP World CEO Sultan Ahmed bin Sulayem will stick with the original plan to be part of the event after UK Prime Minister Keir Starmer walked back criticism of the company from some of his own ministers. So more details on that will be no doubt coming through today at that investment summit, where Prime Minister Keir Starmer and Chancellor Rachel Reeves hope to be able to announce billions of pounds of major investment deals in AI, life sciences and infrastructure during that event. Joining me now for a preview is Bloomberg's UK correspondent Lizzie Burden. Lizzie, what are they expected to announce? How much of this is going to be pre-cooked, preheated or recooked initiatives and announcements? How much of it is going to be real at this summit? How consequential is it really, or is it just a talking shot?
This isn't your first rodeo, is it, Tom? This is exactly what new governments tend to do. They pre-announce money and then they re-announce money. The point overall is that the government's top priority is economic growth. They say that investment is the path to that, hence the spotlight on London today. But as you say, we're expecting them to announce £50 billion of private sector investment into the economy, but £24 billion of that is green investment that was announced last week. We're also expecting Keir Starmer to talk about ripping out the bureaucracy that blocks investment, doing everything in his power to galvanise growth. But look, the problem is is, undermining this sales pitch is, yes, they're going to tell us about their industrial strategy today, which sectors they favour, but we're not going to get the full plan until the spring. So that's frustrating. What business wants is stability and clarity, but we've just marked the 100 days of the Starmer government. It's been marred by the infighting at number 10, Keir Starmer having to let go of his Chief of Staff, Sue Gray, the slew of stories about donations accepted by government officials in exchange for access. You've seen Starmer returning £6,000 of donations for himself, and he's only just managed to secure an investment minister in the form of the ex-Darktrace CEO Poppy Gustafsson just at the 11th hour before this summit because the first choice candidate pulled out. So Starmer already reaching for the reset button, and it's just 100 and a couple of days into his administration.
And of course, and you've been reporting on this, the other source of uncertainty is the budget that's coming up at the end of this month. To what extent will that uncertainty around the Chancellor's plans overshadow this event? To what extent might she hint at what she's going to do in that budget?
Yeah, I mean, there's frustration already that they put the investment summit before the budget. Would it not have made sense to have the budget and then the investment summit so you could give more detail then? But look, Labour's hoping that the investment gathered drives growth, which eases pressure on the public finances, especially given all of the doom and gloom around the fiscal picture and the potential tax rises needed to plug the hole. And that's already been spooking investors and consumers ahead of this budget. Look, one of the potential tax rises that we could get on October the 30th is a rise in employer contributions to national insurance. The Business Secretary, Jonathan Reynolds, yesterday refused to rule that out in an interview with Sky News. Now, the controversy about this is because Labour, of course, has told us they will not raise taxes on working people. Labour says that if it does this, it wouldn't be a breach of its manifesto. However, the Conservatives would say this indirectly hits workers if you're going to raise taxes on their bosses. But either way, analysts say that it could raise £16 billion, which is a chunky portion of that £22 billion hole in the public finances that we keep on hearing about.
It is indeed. Oh, there's a... OK, I'm not going to make the joke. Yeah, a 21 billion fiscal hole. All right, 16 billion is a big number, isn't it? So we'll wait to see if that detail comes through at this investment summit. UK's correspondent Lizzie Burden with a fantastic preview, of course. And today, we're going to be speaking exclusively to the Prime Minister. Keir Starmer is going to be sitting down exclusively with our Head of Economics and Government, Stephanie Flanders. That's at 2:30 p.m. London time. Switching focus right now because SpaceX's Starship completed a major test flight that also included catching the vehicle's booster back at the launch pad. The pictures are incredible. A milestone as the company readies the rocket for commercial operations. You can see the booster coming down there, and it will be caught by what the team described as chopsticks. And this was the moment, of course, that SpaceX had been waiting for. It's never been done before. And here it was being successfully contained, held, picked up by the platform and that pincer movement. The vehicle is the centrepiece of Elon Musk's ambitions around sending people to the moon and Mars. It still has a long way to go, of course, before it launches crew and cargo to distant destinations, but a major step forward for the team at SpaceX. Meanwhile, Boeing is planning to slash its global workforce by about 10%, while announcing it will take a charge of about $5 billion. The cuts will affect around 17,000 roles, underscoring the depths of the plane maker's financial woes amid a crippling labour strike. Talks with the union collapsed last week with no clear path to resuming. Boeing also plans to delay the introduction of its first 777X jetliner and separately announced that it expects third quarter sales to come in well below Wall Street estimates. Let's check in on these markets. China, once again, the focus of our attention. We had a little bit more detail, a little bit more of a framework coming through from the Ministry of Finance, particularly focused on regional governments, their ability to borrow and spend on real estate assets, but no dollar numbers. Maybe that will come in the weeks ahead. But you had a positive session, have had a positive session so far in mainland China. The read across, though, not pronounced. European futures are currently flat. FTSE 100 futures down 0.1%. That's despite iron ore prices popping, and basic resources could move as a sector on that story. S&P futures currently flat as well after a 45th record high on Friday, boosted by the banking stocks. With a little hand there coming through from JPMorgan as their earnings came in stronger than expected. Nasdaq futures currently off by 22 points. Let's flip the board and look cross-asset with a focus on the currency space. Euro dollar at 109, down 0.1%. The pound at 130. We'll see if there is any more detail coming through from the Prime Minister when he gives his speech at around 10 a.m. London time. Then, of course, sits down with Bloomberg for that exclusive interview. Brent at $78.11, down 1.2% so far in the session. Iron ore, again, as I mentioned, getting a little bit of a pop in the session at 108, up just shy of 2%. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. The earnings story is in focus for us this week. JPMorgan coming out with some strength on Friday. On Tuesday, we're getting earnings and numbers crossing from Bank of America, Citi and Goldman Sachs to see if we can build on that story. In terms of the context as to where your bank stocks are now, US banks, of course, the heavy lift has been coming through, hitting a 2-year high. You can see that marked then on the Friday session. You're still off from the highs of 2021, by the way, so there's still some work to be done there. But in terms of the last 2 years, you're up to those 2-year highs. Across 2 years, you've gained around 50% in terms of US banks. And certainly on Friday, it gave a lift to the S&P that hit that fresh record high for the 45th time so far year to date. JPMorgan coming out with results, particularly net interest income coming in higher than had been expected, and certainly pushing back on some of the more negative commentary on that front. Though Jamie Dimon did sound a word of caution. We'll see what happens in terms of the investment banking piece of the story as well, because that was also positive for JPMorgan, and how that transpires for the other US banks on Tuesday and through this week. Let's flip the board and have a look in terms of the macro story around Europe and the doldrums that it is in, and why the focus again shifts to the lift that can come through and the drive, the catalyst of the ECB, fully expected by these markets to cut again on Thursday for the third time of this cycle. But here's the context in terms of where Europe lags. Still below trend growth. This is the US is the white line, above trend growth right now. The US exceptionalism is there. That's the dip of COVID, and you're back above trend growth in the US, but still below it in Europe. And that is a key challenge. And no doubt with the squabbles in Europe, it will fall to the ECB once again to ride to the rescue. Let's flip the board and have a look in terms of the UK story. We're going to be hearing from the Prime Minister. There's the UK Investment Summit. There's a lot of emphasis in terms of the growth and the fact that there isn't as much of a mix as maybe policymakers here would like. It's science, it's technology that's been driving the growth in the UK. They want to see that spread out. We'll get more details from the UK Prime Minister in terms of the industrial drivers going forward. Coming up, we're going to get full coverage, of course, of that UK Investment Summit, including that exclusive conversation with the Prime Minister. Also going to be speaking to the CEO of Barclays at 9:15 UK time. Stay with us. This is Bloomberg.